Good morning, traders. Today is the 22nd of November. My name is Neville Hornsey, market analyst for YouTrading, and today I'm joined by
Joel Frank, also market analyst for YouTrading.
Are you looking well, Joel?
Thank you. Yeah, I mean, maybe I'm looking well because I've bought a few bits of equipment and I've got a light on my face, which might be making me look younger.
Yeah.
But how are you doing, mate?
Yeah, very good. Yeah, feeling nice and relaxed and ready for
Nice.
a relatively big week ahead. So it's all good.
Yeah. I mean, we were saying it's probably going to be, everything's going to be crammed in before Wednesday, really, isn't it? Because it's Thanksgiving on Thursday. And then obviously a lot of the Americans are going to be wanting to take Thursday. Well, they're going to take Thursday off, but then they're going to want to take their Friday off as well so they can have a long weekend.
Yeah.
So, it's going to be like the whole week's volatility probably crammed in at the start, isn't it?
Yeah, definitely. That's what, I reckon, definitely. So, yeah, if there are any trades, it's probably, get them in early.
President Biden's got like a holiday, which he goes on Tuesday. So he's going to do this speech on the economy before he leaves. And then there's expected to be an announcement. So, who's it going to be? Brainard or Powell? Who do you think it's going to be?
Powell. I think they want to just try and get through the next 18 months again, get through their midterm elections, and the markets will be happy, I think, with a bit of continuity. So I think that would be...
I think you're probably right. I mean, from Biden's perspective, he's already been tanking in the polls and all that kind of stuff. So is now the right time to switch to somebody who's potentially seen as more dovish when you're already getting a lot of criticism about inflation?
If Brainard was to go the whole sort of more looser monetary policy, as that's her sort of mandate.
Would be lower for it'd basically be lower for a bit longer with Brainard, wouldn't it? It'd be more time to let the labour market recover, but potentially more time to overheat even more.
Yeah, and I think the market is sort of pushing for a tightening. So they would like the Fed just to get on with it. So
I think you're right. It's by the way, I just checked that that US political betting website Predict It, and they've got, if you bet 70 cents on Jerome Powell to get not renominated, then you win $1. If you bet 31 cents on Brainard, then you get $1. So it's kind of like you could probably loosely say that it's like a roughly 70% chance that Powell and roughly sort of 30% chance that it's going to be Brainard.
Yeah.
That's what the betting markets seem to think. Powell is very tuned in to the market and to not, because he's quite good at not shocking the market, isn't it? He's kind of made that a bit of an art in the last, couple of years. So, but the big development is, we were talking about this before we started the video, weren't we? Vice President Clarida said last Friday that he was sort of open to a discussion about accelerating QE. Mm-hmm. So that will be the big theme for the December meeting.
So the tapering will I reckon they will accelerate that. So they can get to the actual raising the rates a lot quicker.
Another very interesting central bank to talk about this week. I guess we should probably look at the charts as well for this. RBNZ, they are going to hike again. Is it going to be 25 basis points or is it going to be 50? Market's quite split over that now, actually. Even though the most recent poll I saw on Reuters said that most of the economists thought it was going to be 25 basis points. But I don't know if you want to pull up the chart. We can have a little look.
Yeah, last week I did some analysis where I said the market is making like higher swing highs and higher swing lows, and it is technically starting to trend higher. The momentum is obviously not showing that at this moment, but if they were to do 25 basis points raise, then that's kind of priced in maybe. Whereas 50, we could probably get back up to above 0.71 to 0.72 and take out his double top. But
I think you're probably right that if they go with 25 basis points, there are some market participants that will be betting on a 50 basis point move. So there'll have to be some kind of dovish reaction to sort of see those bets unwound. Yeah. But I think the consensus is that probably, even if it's 25 basis points or 50 basis points, the forward guidance is going to be quite hawkish. for the number of hikes they're going to do in 2022 and in 2023. So in the end, like 2 years out from here, it's not really going to have mattered that much if it was 25 basis points or 50 basis points today, this week in November 2021. It's still quite a hawkish path for them. So potentially you could see a bit of a drop on 25 basis point move, but then if the guidance is hawkish, then people might buy that dip. I mean, the RBNZ, they're well ahead of the Fed in terms of tightening. So this trend you're seeing moving higher, I kind of agree that we could see this continue, even with a 25 basis point move.
Nearer to home then, European PMIs, German flash PMIs tomorrow. Even pound, UK manufacturing PMIs, and then...
Absolutely. I mean, I think the European PMIs, they've been not ignored. We never ignore PMIs, but they've been pretty decent last couple of months, and everyone's just kind of got used to the fact that Eurozone PMIs, UK PMIs, they're going to be good. Markets haven't been reacting. This one's more interesting. It's for November. It's the flash. And what have we had in the Eurozone happening this November? We've had this dramatic acceleration in coronavirus infections. So how much of that is going to be reflected in these PMIs? Because you already got lots of people talking about how they might need to reassess their Eurozone economic forecasts. That's obviously contributed to a lot of the recent Euro weakness we've seen. So maybe this PMIs tomorrow can sort of amp up that feeling of economic weakness in the Eurozone, which the Euro could be vulnerable to it. But then again, also the Euro has been getting smashed so badly. Like, is it time for a bit of some technical correction?
I mean, technically, around today would be a great day to bounce, but I don't see that the PMIs are going to actually save the euro. I think the euro is going to come down.
No,
sweep, a lot lower.
Maybe they could save the euro, but I just don't see it as happening. Like, how on earth are PMIs going to improve when infections are surging? Like, I don't think they are.
Yeah, even if it was like backward looking, saying like the last couple of months have been quite good for manufacturing, but even that's not true, because the data from out of Germany was sort of showing that manufacturing was getting worse, and everything economically was not good anyway.
Basically, the manufacturing, there's so much demand for it, which is great, and they're getting massive orders. Orders are well above pre-pandemic levels, but they just can't build the cars or build the whatever they're building, because they can't get the parts delivered because of all the supply chain disruption. So the output is actually remains significantly weaker than pre-pandemic levels just because of all these disruptions.
Yeah, definitely. I think, if there was a bit of a pop tomorrow, just because it was like an algo reading a good number, say that it was a good number, I think that's when a lot more people will be like using that as an excuse to sell into, really. So I
probably.
And there's like a big, just on the chart back in April, there's like a big area where a lot of trading was done. So that's where the most, like we're in a little balance area now, but it's not as big as one below that. So I think if there's any trading to be done, it'll be back down towards the 1.085. So
I think we are probably eventually headed down to that region, because you got to think about the divergence between the Fed and the ECB. The Fed very likely to turn more hawkish. The ECB, for now, even though inflation has been rising in the Eurozone as well, the ECB's been much more determined to sort of push back against it than the Fed, so much more dovish. So that's also another factor.
Yeah, doesn't regard. Last week was like, no, they're not raising rates, not for a while.
Yeah, exactly. That was just one of the many reasons to sell the euro last week, wasn't it?
Exactly. All right, so moving on, I got a feeling that a lot of these banks are kind of waiting for the first mover to be the Fed, as they generally quite often are. So I just thought, the Bank of England are really trying to sort of signal that they want to. I just wondered if they were hoping that the Fed might go, well, we're going to do something, crazy in December as well. Or, just because I would have thought they'd have done the hike, obviously, when everybody thought they were going to do the hike, like last month. But
I know. But anyway, it's going to be very interesting this week to listen to what all these BOE members have got to say, because we are pretty much, markets are trying to set their expectations for December. So things could be quite volatile. Like there are going to be two dovish MPC members Temrero, and who's the other one? Haskell potentially as well.
Yeah.
They're going to sound dovish and everything, so that's not going to be a surprise. But yeah, it's going to be a lot of intention on Bailey. And who else is speaking again? It might have been Hugh Pill speaking again.
Just going back from Friday, because we've got
Hugh Pill
on Friday,
Bailey and Haskell.
Thursday's Bailey and Haskell, and then
Temrero Wednesday.
I think that's it.
Yeah.
Yeah.
Oh, Haskell also. Look, Haskell on Tuesday. Yeah. Nice.
Just going back to like what the market's thinking. Retail traders are actually thinking that the euro and the pound go higher against the dollar, which is always a bit of a worry for people that, we would like the euro and the dollar to obviously go lower. And like me and you thinking.
Me and you, yeah. We're dollar bulls.
Yeah, but at the same time, it does seem like a lot of traders on this platform are actually thinking that the euro bounces off that technical sort of pattern of, descending in a channel and then bounce off one of the trend lines, or they're looking at this sort of balance area and thinking, well, this is where they bought last time, they'll buy again. But with the pound, they're not far off. Like, they're 60% of them still want this to go up, but 1.5 is like a really hard number to get through at the moment.
I mean, I'm gonna call it, Nev. I'm gonna call it. Dixie to 100.
Really?
Where 100 is that kind of balance area that not saying it's going to get there immediately, not saying it's going to get there before the year end, but I think we're going to see that next year at some point.
Okay, that's good. Cool. Anyway, we should mark that down. I mean, to be fair, if we're going to go up to 100, say everyone goes along with this, inflation's like going to be around for a long time. They raise rates, and it's does have a momentum behind the dollar as we're seeing at the moment. Then there is a double top up here at 103, which is always my go-to. That's where the market's been drawn towards, like those levels that have been tested. A couple of times before. I mean, if we're going to go up to there 100, then why not all the way up there to get the liquidity?
Yeah.
Because I was thinking they come down to the bottom at one point, and then we found sort of support from
we did
2018. So the 2018 sort of balance area here stopped it from going any lower. But
yeah,
that's interesting. Like, so what is it? End of November? You reckon at some time in 6 months' time or more, we'll be up to 100? All right, cool.
I think it's going to be up and down. There's going to be periods of consolidation after big moves, like potentially in the next week or next couple of weeks, we could see some consolidation. But as long as the US economy continues to see solid growth, which it looks like it probably should, as long as that keeps the Fed sort of leaning in a more hawkish direction rather than leaning in a more dovish direction, as long as we see the ECB lagging well behind, the Eurozone economic recovery not as strong, although it's actually probably going to be okay still, but it's not going to be as strong, then I would be leaning towards more Dixie strength.
Because I'm just thinking, like, it's almost like a perfect channel now, isn't it? So we've got, in terms of a sideways move, like we're basically in the middle of highs of 2018 and 2016. So we're definitely at like an inflection point. So if the Fed maybe the Brainard Fed thing sort of sways it either way across this sort of middle area. Like if it's Brainard, maybe it comes down. If it's Powell, you get your 100.
That's true. I mean, if it's Brainard and that means no rate hikes in 2022 from the Fed, then my call, I would drop that call immediately. But and
I guess if they do raise rates, or they signal they're going to raise rates, then TLT should come off as well. Like, it should come a lot lower. So
you would think so.
Yeah. All right, something to watch out for. Dollar yen. I really want dollar yen to go a lot higher, because I keep thinking it's going to go a lot higher, and then it looks like it's going to go a lot higher, and then it stops going higher.
Well, I know, but it's the same story with the US 10-year yield. Everyone's like, oh, we want it to go higher, we want it to go higher. And then it's just like, nah.
No. It's a big tease. Like, look, it popped out the top, and okay, here we go. This is like what everyone expects. Like momentum to the upside, price actions to the upside. Yields look like they're going up to the upside. The Fed's talking about raising rates in the future and monetary tightening now. And then the Polygon just sort of messes us about.
I mean, it is mostly sensitive to the 10-year differential between Japanese and US yields. And I think one of the things holding back the 10-year yield in the US at the moment is concerns that, okay, maybe the Fed will be a bit more they will front load their rate hiking cycle a bit more, but maybe that's going to actually lead to slower long-term growth. So I think there needs to be a rebuilding of confidence in the longer term economic outlook in the US, which isn't that, like, the confidence isn't that good, to be honest. And if we see that kind of building up, then that will really push dollar yen higher because it will push the US 10-year higher. But yeah, that's the thing to watch out for, I think.
All right, so as it's going to be kind of a short week, really, a lot of the market participants are out by Thursday. Is there anything else we should be looking at between now and Wednesday?
I think we covered all the main things, to be honest. Let me pull up the calendar again. Like, we've just been looking through it, haven't we? RBNZ, PMIs. Yeah, like, it's a very, I mean, I guess you could say core PCE inflation data out of the US on Wednesday. That's the Fed's preferred measure of inflation. Obviously, we had the very hot CPI. That was like a week and a half ago. Expectations are for the core PCE to continue to rise as well. So just keep an eye on that. Fed minutes, a bit out of date, to be honest. Like, we actually said this before the video, didn't we? Like, because the hot CPI came after the last Fed meeting, so they're going to have to be more hawkish in response. Other than that, that's it pretty much, I think.
Yeah, so kind of New Zealand dollar, then the dollar, and then a bit of pound towards the end.
Yeah. Bit of central bank speaks, always good to watch.
Can't wait for this all to. I mean, I keep looking back through my diary of, like, what the markets do when the sort of Fed or, Bank of England speak. It just always messes up my trading. So I really need them to stop talking. But
they're never gonna do that, mate. They love to spout.
All right. So, okay. Have a great week. And
cheers, mate. You as well.
All right. Take care.